I am the Government Affairs Director for the Greater Philadelphia Association of Realtors. I'm going to turn it over to our GPAR Diversity Chair, Anastasia, to introduce our speaker, Mark Alston.
Good morning, everyone, and thank you for joining us in number 2 of our State of Housing in America series. And thank you to Mr. excuse me, thank you to Mr. Alston for coming and presenting this information to us. Mr. Mark Edward Alston is owner of Alston and Associates Mortgage Company. He's also the current chairman of the National Association of Real Estate Brokers Public Affairs Committee. Mark has served as the first vice president of the California Association of Real Estate Brokers, president of the Consolidated Board of Realtors of Los Angeles, and as chairman of the Mortgage Banking Committee for the National Association of Real Estate Brokers. Mark is a recipient of numerous awards for his community service and his professional achievements. Please welcome Mr. Mark Edward Alston.
Good morning. Thank you for that introduction. Every time I hear the sentence, Mark is the recipient of numerous awards, my mother wrote that. My mother passed a few years ago, but it's pleasant to hear and remind me of my mother. Thank you so much for allowing me this opportunity. I'm going to share my screen and try to get right to it. There's a lot of information, and we want to make sure that we have the opportunity to get it out. It's good to see Lawrence Butler and Annette Collier as well on here. I wish that we could do this in person. I love Philadelphia. I've been there two or three times. It's always great to be in that city. We're going to do the state of housing in Black America. The NAREB, the National Association of Real Estate Brokers, was created out of a need in 1947. Blacks weren't allowed to be part of the National Association of Realtors at that time. And there was a need for an organization that brought both Black professionals, real estate professionals, and consumers together to promote the idea and actually be pragmatic about putting democracy and housing together. This is the current Black homeownership rate in America, second quarter 2021. It's 44.6%. White homeownership is at 74.2%. Black homeownership, as I said, is at 44.6%. The gap is 29.6%. According to the US Census, again, second quarter 2021. Pennsylvania homeownership, 74.5%. Black homeownership, Pennsylvania white homeownership, 74.5%. Black homeownership, 42.3%. The gap between Black and white homeownership is slightly above what it is nationally at 32.2%. But allow me to say that this 30% gap has been persistent since the signing of the Fair Housing Act. It's averaged around 30% for the last 53 years. In 1968, when Black homeownership stood at 42%, white homeownership was at 63%. We signed the Fair Housing Act, and the gap between Black and white homeownership in 1968 was 21.9%. White homeownership has increased to 74.5%. Black homeownership has basically remained the same, and the gap has increased. It's our contention, based on the State of Housing in Black America report for the last 8 years, that this gap, this difference between white and Black homeownership is intentional. What do I mean by intentional? Public policy and tradition have served to block access. Public policy, law, and tradition, how we do things, have served to block access and severely restrict Black homeownership opportunity. there has been targeted, and I'm careful to use the word targeted, opposition to Black home ownership since the Emancipation Proclamation. What do I mean by targeted? Racially exclusionary zoning, private covenants, US government redlining, predatory housing contracts, eminent domain, urban renewal, and today's racially disparate housing finance policies. Let me give you an example. Racially exclusive zoning. For instance, in I think it's Atlanta, the zoning R1 meant whites could live here and R2 meant coloreds could live here. Zoning was set up to prevent race mixing in housing, in schooling, in shopping, in walking down the street. It was made illegal in 1917 based on a Supreme Court decision with Buchanan versus Worley in Louisville, Kentucky. Buchanan bought a house from Worley, bought a piece of land to build a house to live in on the corner of 37th and Palance in Louisville. When Buchanan made it known that he intended to live there, he was stopped because they said the zoning restriction said Blacks cannot live on a block where whites live. And so Worley sued Buchanan for specific performance. He said, you bought the house, you bought the land, you need to close the deal. Worley won in Louisville. He also won in the Supreme Court an appeal in Missouri. It went to the United States Supreme Court, and this was overturned. And this began the end of racially exclusive zoning. It didn't end it. It began the end because they said it was unenforceable by police action. Private covenants. Now what happened is landowners made deals with developers when they sold them the property that the property could not be sold or occupied by Blacks in America. This was made illegal in 1947 by a Supreme Court decision. I think it's it was in St. Louis, Missouri, Shelley versus Kramer. And to give you an example of the type of private covenants, this is on the title of a property, subject to the following restrictions and provisions, to wit, that when said premises are improved, when a house is built on this land, it shall be by the erection of not more than one new 1- or 2-story dwelling costing not less than $4,000, and that the front foundation line exclusive of porch or sunroom is to be located 30 feet back from the front line of said premises, that a private garage may be built on the said residence or on the rear half of said lot, and the said premises shall not be sold or occupied by any colored persons. This is targeted opposition to Black home ownership, even if they could afford it. Another way of putting this is not very clear. No property in said addition shall at any time be sold, conveyed, rented, or leased in whole or any part to any person or persons not of the white or Caucasian race. No person other than one of white or Caucasian race shall be permitted to occupy any property in said addition or portion thereof or building thereon, except as a domestic servant actually employed by a person of the white or Caucasian race, where the latter is an occupant of such property. The office I sit in today has this deed restriction as part of the title. Of course, it's unenforceable. And the house that I live in today has this same deed restriction on it. And then, of course, we realized that the federal government institutionalized redlining when it created FHA in 1934. FHA predates HUD. FHA was part, the Federal Housing Administration was part of the New Deal to bring America out of the Great Depression. In the 1930s, late 1920s and early 1930s, white home ownership in America approached 50%. It was declining and was approaching 50%. It was considered a national catastrophe to the point where they had to start a brand new federal program to help increase home ownership for white Americans. Black Americans, Black home ownership has never been 50%. It's always been below 50%, the highest point being 49.1% in 2004. And it's never been considered a national catastrophe or a national tragedy. As a matter of fact, we would like to get back to approaching 50%. This is a redlining map in your city, in Philadelphia. You can see the red, the yellow, the blue, and the green. Red was places that FHA did not loan in, places that had mixed races and colored people. Yellow was mixed race neighborhoods. Blue was old, traditional, established, all white neighborhoods. And green was the new subdivisions. Some of what I don't think people recognize about FHA, what they didn't just provide housing for borrowers wanting to buy a house. HUD also financed the developers who were building the new subdivisions in the out-migration of whites from inner city America to the suburbs. They financed developers at 90% loan to value to build the housing, and then financed the people moving in at 85% loan to value in the green and blue areas. In the yellow area, if you could get a loan, it was at 15% loan to value, 85% down. And red, of course, did not get a loan. Here's an example of an appraisal, a portion of an appraisal from that time. You can see in the second and third column, the second column is blue, the old traditional white neighborhoods, and the third column is yellow, not even red. And if you go down, it says Negroes, yes or no. In the blue area, it's no. In the yellow area, it's yes. And then how many? 0 in the blue area, 1% in the yellow area. Relief families, none. And in the yellow area, quite a few. And the mortgage availability was ample in the blue area and limited in the yellow area. 98.7% of FHA mortgages went to white families. A very small percentage of FHA mortgages went to Black families. Then we had private contracts. Since there wasn't any institutional lending available, Blacks had to buy property and finance it with those who were leaving the area. And what happened was the properties sold for above market, the rates were high, and they were done on contracts, land contracts, so that you remained a tenant until the contract was completed. If there were any problems that happened during the time of the contract, then generally the property was foreclosed on, taken back, and resold to another property. So you remained a tenant, you lost your money. It's said that just in Chicago, $2 billion of wealth was lost in the Black neighborhood based on these private contracts. Eminent domain, 1949 Housing Act and the 1956 Interstate Highway Act decimated Black neighborhoods through what was called urban renewal. Between 1949 and 1973, government officials executed 2,532 urban renewal projects in 992 cities, displacing well over 1 million people, the majority of them Black Americans. The displacement of African Americans and urban renewal were so intertwined that urban renewal was referred to as Negro removal. And then, of course, we have the Fair Housing Act of 1968. What most people don't really realize is the Fair Housing Act was actually the Indian Civil Rights Act of 1968, and fair housing was Title VIII of it. And of course, even the fair housing portion was failing in the United States Congress and Senate, had been introduced 2 or 3 years prior. The assassination of Martin Luther King and the subsequent not insurrection, but riots and protests throughout the country, 150 cities, brought it to the table and caused them to pass this act. Martin Luther King was assassinated April 4th. This act passed with fair housing in it on April 11th, 1968. In the Fair Housing Act of 1968, Title I prohibited interference with federal troops, obviously a sign of the times and a compromise in this act. Title II through VII dealt with Indigenous American civil rights. Title VIII, which we're familiar with, is the Fair Housing Act. And Title IX prevented the intimidation of fair housing cases. These two go together. You had the Fair Housing Act, and then you had people who reported, and it was against federal law to intimidate people for reporting fair housing violations. Title X was another compromise addition. Civil obedience made it a felony, punishable by up to 5 years imprisonment for in any way obstruct, impede, delay, or adversely affect the movement of police, firemen, or commerce. So for these protests that were going on, it became a penitentiary offense to participate potentially. Then they attached a rider to the bill that also, this was called the H. Rap Brown rider, made it a felony to travel from state to state with the intent to incite, promote, encourage, or participate in and carry out a riot. What's a riot? It's a protest that's been deemed by the police to be a riot. Martin Luther King, other Black leaders used to go from state to state, city to city to help move democracy forward. That made this a potential felony as well. And then they passed what was called the Omnibus Crime Bill and Safe Streets Act in June of 1968. $50 million were earmarked to local law enforcement agencies to deal with riot control. I put this here because, again, this is all a reaction to what was going on in 1968, but this was the beginning of the militarization of our inner city police forces that have created and caused such problems in the inner city. It should be unlawful to refuse to sell to or rent after the making of a bona fide offer, or to refuse to negotiate for the sale or rental of, or otherwise make unavailable or deny a dwelling to any person because of race, religion, sex, familial status, or national origin. This is what it should be. There's a report by the Economic Policy Institute, February 26, 2018, no progress for Blacks on home ownership, unemployment, and or incarceration in the last 50 years. And then, of course, we have today's disparate housing finance policies. What do I mean by that? We have to look at some of the statistics with regard to our income and wealth demographics. The highest earning group, and this is 2019 numbers, I can't find a more current chart. Asians are the #1 earning ethnicity in America, 91,000 household income. Whites at 70,727, Hispanics at 51,747, Blacks bringing up the rear at 43,966. Again, household income, not per capita. Per capita, individual income is lower. Wealth, when you make less, you achieve less wealth, you have less wealth. And when you haven't had home ownership over generations, you also have less wealth. Average white wealth, 2019 again, 147,000. Black family wealth, 3,600. The difference is 40 times difference in wealth. And then if you make more money and you have more money, it's your credit scores go right along with the income and wealth numbers. Asians, the highest earners, have the highest FICO score. Whites, the second highest, with the second highest FICO score. Hispanics, next, third highest income, third highest FICO score, and Blacks at 677. And if you ask Fannie Mae, their report, their study shows average Black FICO score at 620 something. Why is this important? Because when you design a housing finance system that charges more based on down payment and FICO score for an entity that was designed to increase home ownership by providing liquidity to low to moderate income Americans, then you've changed it from being an entity that services the majority of Americans to a racially disparate entity. In 2008, we had a recession. Fannie and Freddie were in trouble. They borrowed $191 billion from the American taxpayer. Since has been paid back, not just the $191 billion, but over $110 billion in addition to that has been swept into the general treasury. They created, when they were in trouble, risk-based pricing and loan level price adjustments. Loan level price adjustments, this is the matrix. I've highlighted a couple of areas. One is if you're putting 5% down to the right, and the FICO scores for the average white borrower and the yellow, and the average green Black borrower in the green. And these adjustments, this 0.5% adjustment is to the cost. This 2.25% adjustment, 1.75% more is to the cost. These are mortgage credit-worthy borrowers, both. They both fit in the guideline. They're both approvable. We just charge one more than the other with no supporting data that one is going to pay less or less often. The difference is on $300,000 purchase, the white borrower at 0.5%, the average white borrower at 0.5% addition to the cost is $1,500. For that Black borrower, it's $6,750. That's $5,250 addition to the cost. Now we realize that this borrower is putting 5% down, so they don't have this additional, in general, $5,250 to put down. So what happens is you offset the cost with the yield from the interest rate. So you raise the rate so that the borrower can now afford the property the same. So in today's market, the 734 or traditional average white borrower would have a 2.75 interest rate with on a $300,000 purchase with 5% down, a payment of $1,163.48 a month. That same mortgage qualified Black borrower with the lower FICO score would have a 3.75 interest rate to offset that cost and a mortgage payment of $1,319.88. The difference is $154.40 a month. And what's really surprising to me is over the life of the loan is $56,304 in additional costs for the same price property with a borrower who's generally performing the same. When you design a housing finance property, a housing finance program, and use these type demographics based on the historical income and wealth scenario that we've had in our country with the targeted opposition to home ownership, you've designed a racially disparate housing finance program. Prior to 2008, there was no such thing as a loan level price adjustment. Fannie was in trouble, and we understand the trouble. They're not in trouble anymore. They made $7 billion in the last quarter, in the second quarter, 2021 profit. It's time to eliminate these loan level price adjustments. They work so well for the institutions that are putting them in place that they put them in place in private mortgage insurance as well. It used to be, if you put 5% down, we multiplied your loan amount by a factor of generally 0.78%. And for every borrower, that factor was based on the down payment, and that was your private mortgage insurance amount. Now they've added FICO scores, and what they've done is 734 at 5% coverage, got 0.5% coverage, which is what the 734 FICO score borrower would get, would be $118 a month. The 677 borrower would get a 1% coverage at $237.50 a month. That is another $11,400 of additional cost, just calculated over 8 years, assuming that you're going to get out of and have appreciation that allows you to get out of the private mortgage insurance. Some people call this both loan level price adjustments on the original mortgage and the private insurance, a black tax for owning a property. The truth is, fair housing so far just ain't fair. We've had 246 years of slavery, 103 years of Jim Crow, and then we've had 53 years of fair housing. There's an old Southern state saying, a good head start beats fast running. If I give you a big enough head start, if I give you 359 years of a head start, and then I make everything fair, what I did was cement in the inequities. I cemented in the disparity, and that's what we see. Let me give you some current statistics. In the United States in 2019, there were 9,325,241 mortgages. Whites got 6,012,506, Hispanics 890,260, Blacks 516,405, Asians 499,980. The Black approval rate is 48.53%. You know, when your approval rate is below 50%, it affects the collective consciousness of the community, causes the community, nobody wants to be turned down. And when more people are turned down than are approved, that word gets out. Now, what you can get approved for is a car. And we go by depreciating assets because it's easy and we know we'll have success and everybody wants to feel successful, as opposed to buying appreciating assets. The Black denial rate in the country 2019 is 27.04%, as compared to the white denial rate of 15.16%. Blacks are 12.2% of the population, but only receive 5.5% of the new mortgages. Now, 2020, mortgages went up from 9,325,000 to 14,460,821. These numbers are equal to the boom year of 2004. There were 14 million mortgages in 2004 and 14 million mortgages during our pandemic year of 2020. Whites received 9,285,000 plus mortgages, Hispanics 1,306,000 plus, Asians 875,000 mortgages, Blacks, we went from third to the back of the pack to 711,506 mortgages. Now the Black approval rate went up, climbed just over 50%, 52.31, white approval is 67.60. The Black denial rate is twice that of white applicants, 21.37 for Blacks and only 11.19 for whites. What's interesting is we actually had a banner year. America had a banner year in mortgage production during this past pandemic year, but the percentages of mortgages to Black families, while the number went up slightly, the percentage went down from 5.5% of the total mortgage production to 4.9% of the total mortgage production. The denial rate for Black families decreased. It got better from 27.04 to 21.37, but the disparity between white and Black denial remains the same. And listen, it took 1,395,196 Black family applications to produce that 711,526 new mortgages. There were 1,088,394 Black mortgages in 2004. That's 376,868 more Black family originations than the 2020 number more than 16 years later. For America, it got better. For Blacks, even with this fair housing, it's gotten worse. Bring it closer to home, Pennsylvania, 2019, there were 326,904 mortgages, 244,374 white, 14,354 Black. Blacks are 12%, they mirror the population of the United States, but only received 4.4% of the new mortgages. Black denial rate is 31.27% in 2019, white 16.99. 31,420 Black families applied, 14,354 new mortgages. And I put that in there, and I put it in there often to show you how many failed applications there were and how many disappointed people there are, how many failed opportunities to earn a commission based on the disparity. And I don't quite understand, owning a mortgage company myself, why there's so many denials. If you're pre-qualifying people, why are so many people being turned down? 2020 in Pennsylvania, total mortgages went up quite a bit, 450,420. White, 335,520. Blacks in Pennsylvania got 16,716 mortgages. The percentage of loans did just what they did in America. They decreased to black families, decreased from 4.4% down to 3.7%. It got worse. Black denial rate is double that of white borrowers. It wasn't double, it was high. It got better, but it's still double, 24.08 for Blacks, 12.91 for whites, 33,537 Black applications to achieve 16,716 new mortgages. And then I want to be specific to Philadelphia. Total population of Philadelphia, of the city, 1,584,064. That's July 2019, I believe. Philadelphia is a majority Black city, 44.8%. Whites are 34.3, Hispanics, you have a large Hispanic population, 15.2, and Asians at 7.8. Majority Black city in Philadelphia. Total mortgages in Philadelphia 2019, 32,305. Majority Black city, whites got the majority of mortgages by almost 300%, 14,164, Blacks 5,866, Asians 3,299, Hispanics 2,376. And these are all types of mortgages. These are purchases. These are refinances. These are people lowering their monthly payment based on the new rates so that they can improve their household income. Blacks are 44.8% of the population, but only received 18.2% of the new mortgages. The Black denial rate in Philadelphia in 2019 was 35.81%. White, 18.03, took 14,284 Black family applications to achieve 5,866 new mortgages. Most current information, Philadelphia 2020, the mortgages went up by 8,000, 41,101. Whites, 20,271, Blacks, 6,311, Asians, 3,460, Hispanics, 2,845. Again, Blacks are 44.8% of the population, but only received, it went down, went from 18 to 15.4% of the new mortgages. The Black denial rate is 27.7, whites, 12.51. The approval rate for Black families in Philadelphia is 46.99%. White approval 64.63%. I can tell you that this is the same no matter what city I do it in. The higher the density of Black population, the lower the approval rate for Black families. The more the majority, the worse the access to credit. What do these statistics tell us? Today's housing realities are the reflection of yesterday's unfair housing policy. You know, I got in trouble for this earlier this year, but I have to say what I believe to be an honest and clear message. And on November 19, 2020, the NAREB president, the National Association of Realtors president, issued a formal apology for the association's past policies that contributed to segregation and racial inequity in America. So on November 19th, president of NAREB issued an apology. And what he said was, we cannot go back and fix the mistakes of the past, but we can look the problem squarely in the eye. What Realtors did was shameful and we are sorry. What does he mean? He means that For instance, in California, the Rumford Act was the predecessor of the Fair Housing Act, and the realtors in California stood against it. When it passed, they appealed it and won. When the Fair Housing Act came out in the United States Congress in California, they sponsored a proposal to change the California Constitution to offset the Fair Housing Act, that sellers could sell to anybody they wanted to, regardless of race. Those sorts of things are what we're talking about. What I want to say is, I disagree that you can't go back and fix the mistakes of the past. I think that you can join us in advocating for positive, affirmative, assertive programs and initiatives targeted to increase Black home ownership. Remember, Blacks were targeted, there was targeted opposition to Black home ownership. So we're going to have targeted initiatives, set-asides, and carve-outs to increase Black home ownership. That doesn't mean Blacks are less qualified. It means that there was targeted opposition and a retardation of progress. So we have a call to action. National Association of Real Estate Brokers has identified 3 things that we think will make the most impact toward increasing Black home ownership and narrowing the gap between white and Black home ownership. The first one is a national restorative justice down payment housing fund, not down payment assistance, but an actual fund. I had the privilege of helping to write, construct, and do the historical context for the Evanston, Illinois reparations program that provides $25,000 down payment grants to Black Evanstonians buying a house, $25,000 restoration grants to Black existing homeowners to restore their houses or do rehab, and 25,000 distress grants to people who were in trouble with their taxes or other distress. This money was funded. Evanston, Illinois, the state passed legal cannabis in November of last year. And so what they did was, Evanston's share of it, they decided to take what has been a vice in our community and turn it into a positive by using the tax revenue from the legal cannabis to fund $10 million in this small 16% Black community to provide reparations to its Black citizens for the exclusionary zoning and discrimination and discriminatory actions of the past. We can do this on a federal level. A national down payment program. It's actually been included in the Down Payment Towards Equity Act Toward Equity Act proposed by Congresswoman Waters. Senator Mark Warner has also got a proposal. It's time for us to start supporting these type of proposals, even if they don't benefit the majority of our membership. Those of us who do better have to reach back and grab those who are in the daily fight of surviving and just need a little push. The second thing is to reform the school loan calculation for mortgage qualifying. It's actually reform and standardize the school loan calculation for mortgage qualifying. Both Fannie, Freddie, FHA, VA, and USDA all have a different guideline and criteria for how you calculate school loan debt. 86.8% of Black students who attend four-year public colleges have school loan debt. It's said that school loan debt for Black students retard their first home purchase by 10 years compared to their white peers. And then eliminate loan level price adjustments, what I call the poor pay more fee adjustment. It's time to eliminate these. Maintenance of status quo is the overwhelming social construct. How it has been is how it's going to always be. It's time to make a change. We have to have radical ask, make a radical change to get away from this standard of a 30% gap and elimination to act, and we have to eliminate this denial of access to credit. It's time to reform our systems to provide redress to those who have been harmed and to restore the dream of home ownership to all Americans, regardless of color. Truth is, I always refer to this. Our lives begin to end the day we become silent about things that matter. It's our responsibility to speak up, to not be silent, to do what you think as an individual is the right thing to do, and to stand on that thing that you believe is right. It's time for us to stand up, not just as NAREB members, but as NAR members, as human members, as community members, as fathers, as mothers, as sisters, as brothers, and recognize that everybody should have an equal opportunity, and that we do have to provide redress for that which we've done wrong in the past. Thank you for allowing me this time.
Thank you so much, Mark. That was an amazing presentation. I learned a lot myself. A little distressing to see those stats for today. You sometimes want to hope that in your lifetime, I'm a millennial, so I really did think things have gotten better. And to see it in black and white is a little bit upsetting, but we can all try to be the change that we want to see in the world. And this time we're going to take some questions. If you have questions, again, please put them in the chat box. And I'll try to get through all of them and provide them to Mark. So first,
Melody, before you open it up to questions, let me just jump on real quick, okay?
Sure.
Thanks. Mark, good morning. My name is Roderick Walker. I am the vice president of the association here in Philadelphia, and I want to thank you for this robust presentation. And as Melody said, it's a bit discerning and alarming to see the numbers haven't moved much in 50 years. But what I will tell you, and we will commit to as the Greater Philadelphia Association of Realtors, is closing the gap. I mean, here we have a phenomenal team in Anastasia and Annette Collier, spearheading and championing homeless rights here in the city of Philadelphia. And we will continue to do what we need to do to move the needle forward. And please feel free to come back anytime. You're welcome. And please reach out to myself, Anastasia, Melanie, if you'd like to partner up in a variety of ways here in Philadelphia, so that we could have a tandem to really move this needle forward. And with that, I just want to say thank you, Mark, for the presentation. Thank you again.
Thank you so much.
Thank you, Roderick. This is also a comment, but I would love to hear your thoughts, Mark. This is from Annette Collier. She's very concerned about Blacks having access to housing, period. That it's a problem that Black Americans can't afford to rent or buy. The administration needs to provide finances for both low and moderate income housing. It's desperately needed. What are your thoughts?
Well, I contextually, I want to say it this way. First of all, hi, Annette. It's good to see you. She sits on as a member of a committee that I'm chair of as a political liaison for us. So it's good to see you, Annette, always. I'm always careful to remember that NAREB is an ownership organization. And while we promote tenancy as an opportunity, it's not a destination, it's a stopping place. And there's a high will to provide tenancy as opposed to affordable housing or access to credit in this country, which does not improve the wealth or setting our status of our Black families and lower that gap within wealth creation. So we are supportive of ideas that will provide opportunities for home ownership in an affordable way, but not where they distract from or cause deference to home ownership. We have to remember who we are. We're the National Association of Real Estate Brokers, who were formed and organized as an ownership organization. And so we're supportive of other organizations who work in those fields and political agencies like the Department of Housing and Urban Development, with programs like Section 8 and other type of senior aid and so on. But as I see them replace single family lots, houses with apartments. And there's a proposition on the ballot here in California, in Los Angeles for this next voting period, SB 9 and SB 10, to allow them to build apartment buildings in single family neighborhoods. Now, there's positives and negatives to it, but when we increase the density, do we do any good? When we take away home ownership opportunity, does it really do us any good? Is it, you know, they used to have a term I used to hear when I was young, hustling backwards. I'm afraid of that. I'm afraid of that. So I don't want to talk about tenancy. We know we need it. I want to talk about home ownership, how to get a mortgage, how to get ahead, how to grow some equity, how to amortize a mortgage, how to put some stakes in the ground, how to have a family headquarters, how to have some pride of ownership, how to revitalize our communities. We do that with ownership. So we support those organizations who are providing occupancy in a tenancy way, but we're an ownership organization.
Thank you, Mark. This is from Henry Davis. He says that getting out of the mortgage insurance premium has become more Getting out of MIP has become more difficult since the previous administration rolled back a lot of the Dodd-Frank legislative priorities, or rolled back those regulations, I should say. What are your thoughts on this?
Are we talking about MIP, FHA? Are we talking about, well, let me address it because it's a question in the chat. Dodd-Frank is in place. All of the provisions are in place with Dodd-Frank. Let me share something with you. I'm not a proponent of Dodd-Frank. Dodd-Frank has built a barrier as opposed to a bridge. If you really look at Dodd-Frank, Dodd-Frank is not the Mortgage Reform Act, but the Wall Street Reform Act. And there's 3 articles in Dodd-Frank that deal with mortgages. They limited the compensation to 3% for loan originators, which meant that if you have a $75,000 or $50,000 mortgage, most companies won't do it because they can't make enough to make it worth their company's while. They instituted the Homeowners Valuation Code of Home Valuation Code of Conduct, which created appraisal management companies, which eliminated our local appraisers, which raised the price of appraising, made it non-transportable, created these national companies and have devalued Black neighborhoods even more. Even when you're refinancing and your appraisal comes in low, your loan to value goes up, so your loan level price adjustments increase, or you're no longer qualified for the program that you wanted. There are so many things I can go through with Dodd-Frank that we need to revitalize, reimagine Dodd-Frank and go back and fix it. What I have found is policymakers have great ideas. They don't have any pragmatic experience on the field. And so what seemed like a great idea as a reaction to overvalued appraisals in 2006 and 7, they created these appraisal management companies who now we got appraisers coming from neighborhoods that don't appreciate our neighborhood, are scared to be in it, can't wait to go get there and get out. They don't have it. They don't see how anybody lives there, so they don't give it any value. And so I don't think that the problem is rollbacks by the previous administration. I think the problem is people in position with the thing to do the right, with the mind to do the right thing, that don't have any idea about what the impact of what their decision caused. MIP, to address it specifically, HUD instituted lifelong MIP. It actually happened quite a while ago now. I tried to, we fought against it. I was more of the opinion, let's go ahead and allow it. MIP, that's the FHA mortgage insurance. Let's allow that, but let's offset it with lowering the upfront MIP, the initiation fee to get in, to make it more affordable and increase more people that qualify, because nobody keeps an FHA loan for 30 years anyway. They refinance as soon as they can get out of it. So let's look at it from a pragmatic standpoint. As far as PMI, you're not getting out of your PMI. They're not just going to release it. That gives them additional security. You got to refinance out of PMI. They used to a long time ago let your PMI go when you got to 78% loan to value, but nobody's doing that anymore. But I think we need to look at it from our own position. What I'm learned to do a long time ago was not listen to what they're telling me. I read legislation, and then I work in the field, and I see how that legislation impacts what I do and impacts my community. Real estate's a segregated business in my city, so my clients look like me. And so I look to see how it impacts my business.
Thank you. This question is from Scott Geller. What is the gap between the total and approved plus denied applications?
I don't know. I'd have to go back and look. That's a question I need to look at prior to see the gap between the total approved and denied applications in the US.
Yes, I believe that's what he's asking.
Well, I don't have.
Well, I'll jump in. What I was asking is the approved applications are, let's say, 45%, and the denied are 20%. That only equals 65%. What's the other 25 or 35%?
No problem. It's fallout. It's
Okay.
fallout, and I left the fallout out. I appreciate that question. Thank you. There's several categories. There's approved, denied, and fallout. Fallout is a whole conversation in and of itself. It's people who walked away because they didn't like the interest rate. It's people who did not complete the application. They started the process but didn't complete it. And we think that has to do with lack of originators who look like the borrowers in a lot of cases, that they don't go to the house. They call and say, well, you need this document. And the person doesn't understand the document. They don't go follow up with them. They just let it go. Fallout are loans that originated but did not complete the either denial or approval. That's the gap.
Thank you. This question is from Rochelle, who is also a member of our diversity committee. The vision for addressing national gaps in homeownership is thoughtful. What are some suggestions for specific calls to action at the local level?
Well, paying attention to a lot of things. First, you know what the number one thing we need to do? The number one thing we need to do is energize our community to application. Our applications don't represent 12% of the population or 44% in Philadelphia. We need to get people back to trying to buy. We need to get people not settling for a nice place. I used to always say when I did homebuyer seminars, the problem with most people is they'd rather live somewhere they can't afford to buy. They'd rather rent, someplace they can't afford to buy, because generally your first house ain't your dream house. It's not the nicest place that you could buy. You can rent a nicer spot that you can buy, but you never grow equity. So I think that the first thing we can do is to energize our populace, to educate our populace. You mentioned that these numbers were sobering, but in any business, it's necessary to take an inventory, a good inventory, so you know where you are, so that you're not operating inside a fallacy. Now we know where we are. You guys in Philadelphia are 44.8% of the population, and you got 15% of the mortgages. It's time to energize your populace. It's time to fight for fair and equal employment. It's time to make sure that we do the things that housing numbers are a symptom of the economic criteria and the lack of motivation. It's time to refocus. It's time, I'm not going to say that. It's time to do some things family-wise. Family-wise. At the end of the day, Black men, it's time to marry our women. It's time to raise our children. It's time to put in some good family morals. And this is for all men. It's time for us, a call to action for us as families to get back to doing the things that we do that create the right opportunities, but not just the right opportunities, the right goals. I think that's where we start. I think that's how you begin to narrow the gap. People like me, people like you, we have to grease the skids and put in the policies, but we got to get the people back trying. Our app, forget the approvals, forget the denials. Our applications should mirror the population. So there's 44% of the applications in Philadelphia should be by 44% of that population of color.
Thank you for that. This is from Loretta Witt. Mr. Alston, you suggested 3 reforms for moving forward. First one being down payment, housing fund. The second being recalculating student loan debt. And what was the third one?
Loan level price adjustments, eliminating the poor pay more fee adjustment. You wanted me to expound on that?
You can, yes.
Yes, please.
So, again, prior to April 2008, well, you got to go back and read Fannie Mae's mission statement. Their mission was to create liquidity in the housing market for, it says, very low, and low to moderate income Americans, including providing products that don't provide a market rate revenue, lower interest rates and other things. We've allowed Fannie Mae to get off mission. So we've got to bring them back to mission. They were in trouble, granted. They initiated these drastic measures, risk-based pricing that charged the least seated more than the best seated. It's time to eliminate that and make the risk aggregated across all the borrowers. The program should be self-sufficient. So loan level price adjustments are egregious based on Fannie being what it is, Freddie too, and America being who they are and what they were supposed to do. They have duty to serve requirements. They have affordable housing goals. We set the goals, they don't meet the goals, and they just set new goals for next year. There's no enforcement. I learned a long time ago, I went to the Obama White House, 6 of us Black guys in the meeting, and we were told that they weren't willing to propose or support any bill that supported any one segment of the population. I left there forgetting about legislation and working on policy and regulation and realizing today that we got enough laws on the books. What we don't have is proper implementation or enforcement. If we had proper implementation or enforcement of what we have today, we could narrow this gap and move home ownership forward. That's our biggest problem. Legislation takes decades. Regulation and policy is a stroke of the pen by the person in charge.
Thank you.
Thank you. Another question that just came in from Annette. How secure is CRA, which is the Community Reinvestment Act?
Hey, you keep coming with those ones that I have issues with, Annette. CRA, Community Reinvestment Act. How has it worked so far? Has homeownership got better in the Black community? Who does CRA benefit? I'm worried that we mitigate I'm worried about that. I get it, but what has it done so far? And what's the enforcement on CRA? The only time I know a bank is living up to a CRA is when they want to buy another bank. That's when you see them come in your neighborhood and say, we got a new program. Why? Because when they investigate their CRA is when they want to grow. As long as they don't care about growing, nobody cares about their CRA. So I'm not caring about CRA either. I'm more focused on policies. And CRA, you know, nonprofits care a lot about CRA because that's how banks get around doing other things, is they put home ownership centers in your neighborhood, or they contribute to nonprofits like NAREB and others, and that covers their CRA requirements. But pragmatically, realistically, we've gone down since CRA has been around. I think it's time to reimagine a new opportunity, a new idea, personally.
Thank you. I think that's it for questions.
Well, thank you so much. I hope, you know, somebody's got to speak to these issues, and they're not meant to be divisive. It's meant to speak. I'm Black. My mama was Black. My daddy was Black. He served in the Navy. I'm an American. It's an insult to me to think anything other than being an American. I fly a flag in front of my house, you know, every day. But I speak to the issues that concern Black America. When you're cut, you know, you don't need to be quiet. You need to holler and say, I'm cut. We've been injured and it's time to get healed. So I appreciate the opportunity to speak, for everyone to participate and to listen. And we're looking forward to, I don't expect this to be fixed in my lifetime. We can just stop the decline and start to go in the next direction. If we can not gloss it over for our younger people so that they, you know, I'll say this and then I'll be quiet. When I grew up thinking everything was great, if you work hard, it was going to be good, you're going to be treated fair and so on. When I was 18, it happened to me and I became disinterested, discouraged. And I had 4 or 5 years of going down the wrong road. You know, I had 4, and I had a Black man tried to tell me before it happened to me what was going to happen. And I couldn't hear him because I was young and idealistic. It's that scares me, that I know can happen, that we've got to teach our young people so that they don't get distracted or caught by that which they don't see coming. And that's the reason for being plain and speaking like I do. So thank you for allowing me the opportunity.
Thank you so much. I'm going to turn it back over to our diversity chair, Anastasia, to close us out.
Thank you so very much. Thank you so very much, Mr. Alston. This was a very, very powerful presentation. In my opinion, it painted a clear picture of historically where we've been in our current situation, and it also offers us some very valuable solutions towards positive change. So thank you so much for that. I also wanted to thank my Vice Chair, Rachel Murray-Richards, for supporting me in this, and our professional staff over in GPAR. I also wanted to thank PMBR's President, Chris Sample, and Vice President Annette Collier for partnering with us and bringing this and helping us to bring this information forward. So thank you all very much. Thank you for everyone who attended. Looking forward to part 3 in our series, and Mr. Alston would love to have you back at a later time to go deeper into some of these things.
Thank you so much.
And Matt or Melody?